Welcome to Empowered. I'm Elizabeth Naumovski. What is a reverse mortgage? Now, we've seen the star of Magnum PI, Tom Selleck, in commercials in the United States promoting reverse mortgages. And here in Canada, we have world champion figure skater, choreographer, and commentator Kurt Browning. They talk about reverse mortgages, but a lot of people don't understand the product. We'll figure out the pros and cons of a reverse mortgage and talk about the golden triangle of happiness. Today, I'm joined by Yvonne Ziomecki Fisher. She's Executive Vice President, Marketing and Distribution, HomeEquity Bank. Yvonne's also the co-author of the book Home Run. Yvonne, welcome to Empowered. Thank you for being here today.
Thank you very much for having me on, Elizabeth.
So let's begin. What is HomeEquity Bank and what do they do?
So, HomeEquity Bank is a leading provider of reverse mortgages in Canada. We've been in business for almost 40 years, and we are best known under the brand of CHIP, Canadian Home Income Plan.
So, we're all talking about reverse mortgages here, but let's step back for a moment and talk about how important is home ownership today.
I think home ownership is important today more than it's ever been. For a lot of people, it's a way to get into creating some wealth for them and for their families. I came from Poland when I was 18, and I knew my Canadian dream was buying a house. And I feel a lot of people have the same feelings. People who buy homes tend to be more financially advanced than people who are renters. I mean, there's some really disciplined renters who are great savers, but what ends up happening is by owning a home, you're creating wealth, then you get into the retirement years and you have an option in addition to your pension and in addition to your savings to use the home equity in your house to supplement your income in retirement. So I'm a big fan of home ownership. The earlier the better, because you get the appreciation of your asset over time.
Okay, so let's actually dig deep here. Reverse mortgages. Can you explain exactly what a reverse mortgage is?
Yes, people get scared by the word reverse and they think it's a complex product or difficult to understand. It's actually very simple. It's a loan. It's a mortgage. It's for people who are 55 years old or older. Our average client is about 72 years old. And basically what happens is we advance you a mortgage, and you don't have to make any payments. So that's the reverse component of a reverse mortgage. You don't make any payments until you move out of the house or sell the house or pass away. So interest accrues over time. It's not like there's no interest, but in terms of giving you a little bit of a break on payments or cash flow, it's a very popular product. It's increased in popularity over the last decade since I joined the bank. For people getting, in retirement, looking to supplement income, looking to pay out conventional mortgages where now with higher interest rates, they just can't keep up with payments. It's a really, really good option for older Canadians to consider.
So there's a lot of stigma attached to reverse mortgages as well. What do you say to that?
I would say there's some stigma attached to it. I think, for a long time, we've been in business, like I said, for almost 40 years. For a lot of time, people used to think about a reverse mortgage as a loan of last resort, or for people who couldn't buy food for the last few days of the month. That's not the case. It's for a lot more people. People are using it to pay off debts, but also helping family, investing, traveling, etc. The stigma, some of it comes from US, where there were a lot of issues with reverse mortgages and homeowners were being kicked out of their homes. And I think some of the stigma comes from people just not understanding the product, and again, that word reverse makes people nervous. Maybe they've heard stories that are not necessarily true. So we always tell people, do your research, ask around, read the book Home Run, get as much information as possible, and then form your own opinions.
So would you suggest it for your parents or your grandparents, or would you do it for yourself?
So I was divorced, and now I'm remarried. And when I was a single mom with two kids, I thought that that was one of the best solutions for me going into retirement. I had a home, I had a lot of equity built up in the house, and I thought, when the girls are on their own, when I'm on my own in my later years, it would be
Hold,
something I
Yvonne,
would
hold
definitely
that
consider.
thought. Hold that thought. My apologies. We'll be right back. So please don't go away. Welcome to Empowered. I'm Elizabeth Naumovski. Today we're talking about reverse mortgages, and my guest is Yvonne Ziomecki Fisher, and she's Executive Vice President at HomeEquity Bank. Yvonne, my apologies. Before we went to commercial break, I was asking you whether this product was good for your parents, your grandparents, or would you use it yourself? And you were talking about the fact that you were a single mom and you just got remarried.
Yes, and when I was a single mom and I was thinking about what my future would look like, I knew I had my home and I had a lot of equity in the house, and I also knew my earning potential was getting limited as a single parent and having to put two kids through university, and I thought this would be a great solution for somebody like me to supplement income in retirement. And we have a lot of clients who are coming to us who their family circumstances are such that sometimes they don't have children of their own, and product's perfect. They can use the money, they can travel the world, they can spoil nieces and nephews. So I would not hesitate getting it myself. And my family lives in Poland, my parents live in Poland, but a lot of our employees actually have their friends and family, extended friends and family in the product. So it speaks a lot to what how we feel about it, and why we feel it's the right solution.
How do I know if I'm the right candidate for this, though?
So you need to be 55 years old. You need to own a home. You need to assess your financial situation. So, do you have enough income coming in to do everything that you want to do? So, are you traveling? Are you driving the right car? Or are you putting off some repairs? Are you saying no to your friends when they're asking you to go out because there's not enough money for you to go out and buy groceries? And with inflation over the past few years, things have gotten a lot more difficult. So it depends. It's based on individual circumstances. We know that about 15% of people go into retirement carrying a mortgage, and an average mortgage is about $130,000 for somebody 65 plus. So how are you? Do you have enough money to make those payments? I think we don't spend enough time planning for retirement. I was just reading a really scary stat that half of the people heading into retirement at 65 have less than $50,000 saved up. So if you're one of those people who have less than $50,000 saved up, you probably should be looking at a reverse mortgage, taking equity out of your home and living retirement in dignity, and having access to finances.
So tell us what you're seeing in the real estate markets and what your clients are saying right now.
So over the last few years, we've seen a lot more movement in terms of sales in large markets across Canada. So GTA and GVA, a lot more units, a lot more volume of homes being sold. Prices haven't gone up as much, I would say, but there is a lot more activity, and we have been on the receiving end of subsequent rate cuts. So as the mortgage rates come down, a lot more people are going to feel more comfortable getting in the market. So I actually feel the combination of the house sales and then prices going up is going to be something we're going to be seeing within the next few months going into the next season. And consumer sentiment is also, relatively positive. We're post COVID, people are kind of feeling more comfortable, they're more settled. I feel like it's a lot more positive environment than even 2 years ago. The only red flags I would say are, the geopolitical crisis around the world, and the neighbors south of the border. It'll be really interesting to see what the new administration brings.
So, you'd mentioned earlier about, you just mentioned south of the border, but earlier you mentioned the difference between Canadian and US reverse mortgage. Is there a big difference?
There's a huge difference. So in Canada, we are a Schedule One federally regulated bank. So we are under OSFI supervision. We're regulated by FCAC as well. In the US, the providers of the product are very different. They're not in most cases they're not banks. In most cases, the regulation is very, very different, and they don't have the mortgages on their balance sheet. So the program in U.S. is government insured. It attracts different type of client. I think it drives different behavior, and they've gotten in trouble on a number of dimensions with their clients and with the media. And this is something that was a lesson for Canada, making sure that we don't, repeat their mistakes.
That's good to know. So
Yeah.
when we come back, we're going to talk about a census study. So please don't go away. Welcome back to Empowered. I'm Elizabeth Naumovski. Today, our topic is reverse mortgages. Yvonne, there was a census study recently, November 2024. What was it about?
We decided to go out and survey just general population and their age demographic, 55 plus, and find out more about how they're feeling about getting into the retirement, what's important to them, what's top of mind, what's stressing them out. And the findings were really interesting. We found we learned a number of different things. We learned that life in your 50s is very, very stressful. People are trying to figure out what the end of their careers look like, usually end up being the sandwich generation. Kids are at school or graduating, and we're looking after our parents. And then happiness actually increases in your 70s and 80s. So it's a very, very happy time. And we found that the one of the most important thing to people as they age is freedom. So having the emotional freedom and also practical freedom to do the things that they want to do.
That's important. The finding is very important because you never think about being super stressed when you're in your 50s. You think about just keep, grinding, focusing, and looking at the next steps. But I guess a lot of the stress would be making sure that you have enough money to retire with.
Yes, absolutely. So, different themes start to emerge in your 50s. So you're starting to wind out your career one way or another. Even if you're going to work another, 10 years, you're starting to think about, what the exit is going to look like. And then you start to think about what am I actually going to do in retirement? Because that's a big existential crisis for a lot of people because we're so tied to raising our kids if we have them, and then we're so tied to our careers. What am I going to do at 65 for another 20, 25 years? So that's stressful. And then the money part, right? So if half of the people retiring or heading into retirement only have $50,000, that becomes very real, and they don't have a lot of runway. Then you start to layer in divorces, so great divorce. Then you start to layer in parents getting sick and having to help, find care for them, etc. And it's just so many different things that come at people at once. It can be extremely, extremely stressful. And then men and women um, respond to it very differently.
Yeah, this is very, very true. Let's talk about women. Women make less than their male counterparts. We make about 87 cents to the dollar that a man makes. We live much longer, so we have to make sure that our savings last a lot longer for us. And you talked about the sandwich generation, and we're natural caregivers as well. So
Yes.
we have three strikes against us when we head into retirement. But I want to ask you, what are the differences between men and women in retirement?
So it's really interesting because the nurturing nature of women kind of carries into the retirement. So even though all these three things are stacked against them, women throw themselves into community. Women tend to be more in service for others. So they're the ones looking after their aging parents and their husband's aging parents. They're the ones making sure that the adult kids are all right. And oftentimes, because they do live longer, they start to face financial difficulties later on because they're used to husbands managing money. Older generation was not very good at communicating about money. So sometimes when the husband passes away, women are not even familiar with the day-to-day finances or the state of their finances because it's such a taboo. And men, when they get into retirement, and they're healthy and they can have lengthy retirement, they are more focused on organizing the financials. They're more focused on projects. They're more focused on, having the hobbies. Women are, like for most of their life, very, very nurturing, and involved in the community, and men start to focus more on finances and enjoying retirement.
I think you brought up a really good point. Women need to really, pull up our sleeves and start understanding the finances, start understanding what's happening in our households, where the money goes, because a lot of times their spouse ends up dying before them and they have no
Yes.
idea where the finances are, or how to deal with them.
Absolutely. And, these women come to us because sometimes there wasn't enough money, to last for retirement, and they don't know what to do. And we have very in-depth conversations, probably sometimes the first time they've ever actually talked to someone about money in this way. And
Hold that
my
thought.
advice.
Hold that thought, Yvonne. We'll be right back. Welcome back to Empowered. I'm Elizabeth Naumovski. Today's topic is reverse mortgages, and I'm speaking with Yvonne Ziomecki Fisher, and she is executive vice president at HomeEquity Bank. Yvonne, we were talking about women and money before we went to break.
Yes, I started to say when we see women come to us when they were recently widowed and or big changes in their circumstances, my advice is always to take the time and move slowly. Don't make any rash decisions. Don't sell the house. Don't move out. Don't rent, and think about what you want for retirement because women are living longer, and they're very attached to their homes. And there's something to be said for the community, living somewhere where you know your neighbors, having your doctor nearby, having a grocery store nearby, etc. But women in that generation were raised not always managing the money and not always having access to all the financial information. So I feel like it's a generational shift. Women of our age have a very different attitude towards money and very different approach. We try to be very kind and very gentle with older women who come to us because sometimes it's the first time they're having a conversation about money.
It's scary as well.
Yes, it can be scary and intimidating, and it's hard to know who to turn to for information. So we always also suggest, talking to the family, the children, or trusted advisor, or the banker, somewhere where they can feel comfortable, because it can be extremely overwhelming, especially at a time of loss.
So credit scores always come up, when you're looking for a loan or whatever. Do you look at credit scores as well?
We look at them. We don't use them the same way that a big bank would use it. We use them if you were applying for a regular mortgage. We just want to make sure that you're good paying your bills on time, that you're going to make you're paying your property taxes, that your insurance is up to date, and then you're going to keep the house in generally good working order. So yes, we pull the credit bureau for everyone, but it does not work itself into the underwriting decisions the same way it would for a big bank.
Earlier, you talked about freedom in the census that you did. What is freedom in retirement?
Freedom in the retirement. So there's two types of freedom. One is the emotional freedom to have dignity, to have choices, to be able to make your own decisions. And the other is kind of more practical freedom, where you want to upgrade your house and you want to feel like you're in a good financial position and you can travel, you can go out with your friends. It changes a little bit as the decades of retirement change, and it's not a big freedom. Like people who come to us, they're not looking for freedom, and going on a yacht trip. They're just looking for freedom to go to, England on vacation, or go to Italy, or do something for their grandkids. But they want that sense of independence. They want to feel empowered, and finances play a huge part in it.
Yes, of course. So, could you please explain to me what is the golden triangle of happiness?
Of course, with pleasure. So, studies over time have found that the three critical elements that are needed for people to be happy, And it's even more important in retirement than in younger years. So at the base of it, the foundation is just the financial security. You need to feel like you're financially secure in order for other things to come into play. So you need to be able to pay for rent, you need to be able to pay for food, and it, it doesn't have to be an extravagant life, but there has to be enough on monthly basis. The other part of the triangle is the other angle of the triangle is our relationships. So you need to have meaningful relationships in retirement in order to be happy. So they can be your friends. It could be interest clubs. It could be a book club, a knitting club, a pickleball group. It can be anything, but you need to have really good relationships to be happy in retirement in addition to money. And the third one is purpose. You need to feel like you're giving to something, and it can be purpose with a small p. It doesn't have to be huge. It could be volunteering, it could be just doing something in the community, but it's really important to feel fulfilled. So when those three come together, that's the golden triangle.
That's wonderful. Thank you so much, Yvonne.
Thank you.
As you've just heard Yvonne, the golden triangle of happiness includes financial control, strong personal relationships, and a sense of purpose. It's important to understand all the options you have. Strong finances can be a foundation for a happy and healthy life. I'm Elizabeth Naumovski, and I'm here to empower you and make frugality fashionable. Thank you so much for watching. Bye for now.